Hello everyone. Welcome to yet another video. Welcome. Last week's video was quite short, because we didn't really have enough information to put out there. But this week we have enough. This week we have enough, and I hope that you lot get to use them and understand them. So firstly, what I'm gonna say is this: for the week, we haven't placed a trade for like 2 weeks now. So from last week to this week, I haven't really placed a trade because I am still in one. You understand what I'm saying to you? I'm still in a trade. I'm not gonna go jumping and say, oh, it's taking time to go into the direction I want it to go. It's taking time, it's consolidating. That's how the market moves. That's how the market will moves. That's how the market works. It consolidates. You see what I'm saying to you? It has to consolidate, it has to relax itself. So for this week, or rather for the past 2 weeks, I've been in, so last week and this week I've been in USDCHF. I've been holding USDCHF. I've been holding USDCHF, and I know that it's going to fall because of past information. You can see right here, double top, double top. So I know that it's going to get all the way here. Because this is my it's going to 1 minute. Let me make this up. Let me expand it. So yeah, and it's gonna get all the way here. So this is my first take profit right here. Now, how did I get this first take profit? Now, on the weekly time frame, I can see that we are bearish, right? We are bearish, and I can see that we had the consolidation around here, and we had this long impulse, right? So what do I do? You know how we get first take profit. You copy it and you paste it. Simple as that. You take the last consolidation and the new consolidation, and then you use the impulse to get to where it's going to end. So on the weekly time frame, I know that this is where it's going to end. This is where the force is going to end. So all the way to this place, I have like a 7-1 or a 6-1 thereabout. So, but moving on, the what I'm going to talk about for the week is this: liquidity. Liquidity. What I'm going to talk about. Listen, I'm not really into the ICT, but liquidity is a term that is used everywhere. Is what I have figured out. Is a term that is being used for everywhere. So this is how it works. Now, I am fully based on market structure. For me to be able to know where the market is going, for me to be able to know what to what to look for in a trend, I need to understand the market structure. I need to know where the market is facing. I need to know what the market is saying. You see what I'm saying to you? But there are times where in the market, we might be bullish, higher high, higher low, higher high, right? It comes a little bit below the last high, the last higher low, right? And then it still goes into the right direction. You know what I'm saying to you right now? It still goes into the right direction. This is what I'm talking about. This is what they call liquidity. You see what I'm saying? It comes a little bit below, but still goes in the right direction. I've used it a couple of times, but I really didn't understand it until yesterday. When I mean understand, I really didn't incorporate it into my trading until yesterday. So I'll give you an example, right? So you can see on these planes, just excuse the planes, please. You can see on USGJPY, right? USGJPY is bearish for the short term. It's bullish on the monthly time frame, but on the short term, it's bearish, right? So we look for sales, right? We look for sales. But in this case, we look for sales, we reduce our risk. That's how to trade, markets that are, not trending. You see what I'm saying to you? Markets that are in a mid-term reversal. Excuse me, we reduce our risk. That's how it's done. That's all you have to do, reduce your risk. So you can see on the USGJPY, right? We're bearish. You see what I'm saying to you? We're bearish, right? How do I know that? Lower low, lower high, lower low, lower high. Let me make it. Let me use arrows for you now. So to see lower low, lower high, lower low, lower high, right? Lower low. Now we've come in to put a higher high. You need to understand that we've come in to put a higher high. You have to zoom in because it's your money at stake, right? You have to zoom in. You have to see. We've come in to put in a higher high because why the body has closed above. But what else do you see? What else do you see? You need to understand that the market moves with momentum. What do you see? I see momentum on the daily time frame. I see a huge bearish engulfing. Now, this is what they call liquidity. When the market comes and closes a little bit above the last body close, it has, given a liquidity sweep. In some sense, it has taken a lot of people out. But you need to understand that we must be the trick is the idea is we must be coming off of a demand. That's the idea around here. That's what we're saying. You must be coming off of a demand. This is a demand zone. This is a demand zone right here. The low that gives the push is the demand zone. You understand what I'm saying to you? This is the demand zone right here. This is the demand zone right here. You see what I'm saying to you? So what did the market do? The market came back into the demand zone, which was also in confluence with our real psychological number 151000. You can see that we are building confluences. You can see that we're not just saying, okay, it's here, it's there, it's there. Let's do this. No, we are building what confluences. We are at a demand zone 151000. You can see that we're at a demand zone, right? 151000. We're having a bearish engulfing off of that zone. That's what I'm saying to you. And if you go to the higher time frame, there's something I'll tell you, right? Understand this. A shift of structure on a lower time frame could be a retracement on the higher time frame. I'll take this again. A shift of structure on the lower time frame is a retracement on the higher time frame. Are you understand what I'm saying? Now, let me show you. Let me show you proof, right? You can see on the weekly time frame we are bearish. You see what I'm saying to you? On the weekly time frame, we are bearish. How? Lower low, lower high, lower low, higher high, higher low, higher high. It came and put in a lower low. We've broken structure. We are bearish. You do not need a soothsayer to tell you we are bearish, right? But if you go to the monthly time frame, that is why you need the higher time frame. You need to go higher and higher and higher. The monthly time frame is the highest time frame that we use to analyze as technical analysis. You need to go higher. On the monthly time frame, what do you see? I see a higher high, a higher low, a higher high, a higher low. This is not technically a higher low, because why? We have not put in a higher high. So this is the higher low. Until we break here, then we are bearish. But on the monthly time frame, we are bullish in structure. Overall, we are bullish. What does that mean? We're just having a little bit, it's just a retracement. It's just a midterm retracement. You see what I'm saying to you? But we are still what? We are still very much bullish. We are still what? Very much bullish. So on the weekly time frame, we are still bearish. But on the daily time frame, we had a little bit, we had a shift of structure, but at a demand zone. You see what I'm saying to you? And if you bring out your Fibonacci right now, you see that this is what a golden area. This is the golden zone that we've touched. You see what I'm saying to you? This is a golden zone right here. This is a golden zone. You can see we are still what, very much bearish. All it did, so you're telling, so all we are saying right now is this: the daily time frame broke structure a little bit, but it went to fulfill a weekly Fibonacci zone. That's all that happened. We are still what? Bearish. We are still what? Very much what? Bearish. Now all we have to do is this: go on the lower time frame, not even on the daily time frame. Go on the 4 hour, go on the 1 hour, go on the what? Go on the what? On the 4 hour, go on the 1 hour. Go on the 4 hour. So we can see on the 4 hour, we can see that we're having reversal patterns already. Break of structure has happened. Higher high, higher low. These are intermediate lows. These are lows that are inside. Now, if you remember in the beginning of the video, I said the low that provided the push, the low that brings the higher high. This is the low that brought the higher high, not this low. This low brought the higher high. You see what I'm saying to you? So we don't have to wait for this low to be broken. This is the low that brought the higher high. So these are intermediate lows, internal lows. So we broke this low. Now we are bearish, but we haven't fully broken the sorry, we haven't fully received the criteria to execute. What are the criteria of execution? Break of structure, break of canal trend line. We need these two things to happen. Now, a trend line is a trend line. It's just a trend line. A trend line is just a trend line. Anything could be a trend line. A trend line is a trend line, but a trend line that is attached to structure, a trend line that is used with support, that is it. That is more than a trend line. You see what I'm saying to you? All I'm trying to say is this: you need two or more confluence to enter a trade. That's all I'm saying. That's all I'm saying. You need two or more confluence to enter a trade. Before, I used to use just break of structure, but after a while, you will notice that even when the market breaks structure, it will still go and hit a stop loss. Trust me, trust me, trust me. I've taken a lot of losses to know to know to know these little things. Even when the market would break structure, yeah, it will still go and hit your stop loss. You see what I'm saying? It will still go and what? Hit your stop loss. So by the time you add trend line, you will notice that, okay, boom, You will notice that okay, it has not cleared the trend line, but it has broken structure. See, listen, the market can easily open next week and go all the way up. Why? Because we are still at a trend line. We haven't closed below. We haven't opened below. We are still at a trend line. You see what I'm saying to you? The markets can easily open next week and then have a rocket shoot to the upside. You see what I'm saying to you? That can easily happen. But by the time you are patient, by the time you wait for break of structure, break of pattern trend line, then you have something tangible to back on, to hold on and say, okay, this is is tested. This is a proof that okay, even if it goes and hit my stop loss, at least I followed this plan. Trust me, it works. Trust me, it happens. Your stop loss will get hit, even though you break structure. Even when you just break a trend line, your stop loss will get hit. Because trust me, the market fakes out. The market fakes out. These things, I'm telling you, these things happen. These things happen. So this is what I'm trying to say about liquidity. So we've come the market has the daily time frame has given us a bearish engulfing off of liquidity. That's come and put in the liquidity and then it's falling to the downside. Now this same thing happened on GBP USD. I'm about to show you right now. Sorry, yeah, on GBP USD happened a long time ago. I think the beginning of the year or something like that. Happened on GBP USD right here. So if you look right here, you can see that we had liquidity right here, and that was when the market started actually moving. You see what I'm saying to you? That's when the market moves. After fulfilling liquidity, that is when the market moves. So you can see the market was bearish, right? Lower low, lower high, lower low, lower high, right? Lower low, and came to put in a higher high. I don't care how you see it. That is a higher high. Why? Why is here a higher high? Because excuse me. Because we've body closed above the last low. We've body closed, not above the wick, above the body. You see, you need to understand that the body is the tangible price. That is where price stops. That is where price has given a reading, not the wicks, the body. So the body has closed above the last body close. We are bullish now, higher high, but you need to put into consideration there is something called liquidity sweep. Liquidity sweep. You see what I'm saying to you? That is when you can see after the market, you can see it came back and fulfilled the same demand level, and then that is when the drop happened. Fulfill the demand level, that is when the drop happened. Now I know what you're thinking. What if we're not at the demand level? Now this is what happens. Something like this happens here. Lower low, lower high, lower low, lower high, lower low, right? And then it breaks structure right here, right? Breaks the structure and then also breaks the structure. We're not gonna say, oh, we're at a demand level. No, this is the demand level that we're gonna use. Now we are fully bullish. Why? Because we've broken two demand levels. We've broken this one, we've broken this one. Now we are fully bullish. All you have to do is what? Wait for the falling knife. Wait for the left shoulder to be fulfilled and then look for buys. That's how it happens. It is this easy. All you have to do is this. All you have to do is this. Test it. All you have to do is follow the plan. Just keep testing it, keep using it, keep paper trading it, and then it will stick to you. It will be something that is second nature to you because why? It will be buried in your subconscious. You understand what I'm saying to you? So so that's everything for liquidity. To be honest, it's that easy. Trading is not complicated. We complicate it ourselves. Trading is not complicated. It's easy. It's very easy to understand. It's very easy to follow the rules. We just complicate it ourselves. You see what I'm saying to you? So this is everything I've got for you on liquidity right now. So just follow the plan, follow the rules, trade the plan, trade the rules. That's all you have to do. You don't trade the market, to be honest, you trade your plan. You know what I'm saying to you? Everybody trades the market and people still take losses. But you will be able to mitigate, you will be able to reduce your losses because you follow your trading plan and you follow your trading rules. So for the plan for the plans for this week, like I said, I'm holding trade. So I'm holding a trade right now, so I'm not looking to trade this week until I close. So you can see one more time liquidity sweep for this week. We're looking at Euro CHF, USD JPY for this week. For this week, Euro CHF and USD JPY. So you can see liquidity sweep one more time. Higher high, higher low, higher high. This is still a higher low because we refuse to body close above this high to give us a new high. Excuse me, to give us a new high, right? Now remember when I said a couple of minutes ago. I said a break of structure on the daily time frame can well be a reversal on the higher time frame. Let's go to the weekly time frame and see what we are saying. What do you see on the weekly time frame? All we see is a structure. All we see is a retracement. All we see is a reversal. If you take your Fibonacci from the high to the low, you will see that we are at a golden zone. We are at the golden zone. So you're telling me all we came to do on the weekly time frame was fulfill the Fibonacci that produced a lot of noise on the daily time frame? Yes. That's all I'm saying. Yes, that's all I'm saying. Why? Because we went higher. We went higher to see, okay, we can see there's trouble on the daily time frame. What's going on the weekly time frame? What's going on the monthly time frame? You need a bird's eye view. You need to zoom out. Just zoom out, zooming out, zooming out, zoom out. People are too enclosed in the market. Your eyes are too close to the chart. Get out of the chart. Get out of the lower time frame. Go to the monthly time frame. Go to the weekly time frame and have a bird's eye view. You know, have a bird's eye view on your analogy, on the analysis of the market, on the direction of the market. Trust me, it will help you. Now, if the daily time frame was where we were stuck at, right? If I was stuck at the daily time frame, I said, oh, I wouldn't go higher. The daily time frame is all I'm using. The 4 hours is all I'm using. I would be like, oh, we're bearish, right? That's all I'll say. We're bearish. And then I'll look for sales. But no, we are still bullish. The weekly time frame is still bullish. All we are doing right now is fulfilling a demand zone that gave a liquidity sweep. Demand zones, they always go a little bit below the last body close that make it look bearish. But that is when the force is coming in. You can see after every demand zone is fulfilled, the next push is a bullish engulfing. This is higher than this a little bit. The next push is a bullish engulfing. Now, for execution, for entries, we're not ready to enter. Why? Because we haven't fulfilled these criteria: break of counter trend line, break of structure. Look at this. We need minimum of 2 to 3 touches. 1 minute. So tap one, tap two. You can see how the market is fulfilling. You can see how it's following. I didn't plot this trend line off of this. I plotted it off of this second touch and off of this first touch. You see what I'm saying to you? Off of this second touch and off of this first touch. You can see it came in, rubbed it. You can see it rubbed it and fell. Rubbed it and fell. Now we've broken the trend line. Yes, it's visible. But we haven't broken structure. We are still very much bearish. We are still very much bearish. We haven't broken structure. You see what I'm saying to you? So we have to wait for structure to be broken above this line. You can see we're even rejecting it. Pin bars, pin bars. We're rejecting it. The market is not ready to move yet, but I bet you there are people already in this trade with their sales right here. There are people already in this trade with their execution right here because why? We've broken the trend line, right? And their stop losses right here. But we are still very much bearish because why? We haven't broken structure, and this market can easily come and take everybody out and then go to the upside. That's how the market moves. That's how the market moves, and then you will say, "Oh, the market movers." No, no, no. They're not market movers yet. They're not market movers here. You're the one who's entrapping yourself. Stop entrapping yourself. You see what I'm saying to you? Stop entrapping yourself. We are still bearish until we close above and until we break the counter trend line. Don't execute. Okay, fine. We have excuse me. I know what's happening. I haven't drank water yet, so excuse me. So we haven't closed above. We haven't closed up. We haven't closed above the last structure. Nobody closed, but we wicked it, right? Nobody closed. This is what I'm saying about the body closes. You need the body to close above, not just wicks. You need the body to close above, right? So we've closing above the trend line, but we haven't closed above the structure. We are still very much bearish. You can see we're rejecting it. It's clear as day. We are rejecting it. You see what I'm saying to you? We're rejecting it. So this is all I'm gonna say. This is all I'm gonna say for this week. This is our plan for this week. Euro CHF, this is the plan. USGJPY, that's the plan. All you have to do is wait for break of trend line, wait for break of structure, and you're good to go execute. It's on me. It's on me. So I hope and pray that you lot follow your plan, subscribe, and leave a comment. Turn on post notifications. So it's not just enough. I'm not looking for subscribers to just have count. I need you to follow what I'm saying. I need you to execute what I'm saying. I need to use my ideas, attach them to your own, and prosper. Attach them to your own and use them for something great. So have a good day. Have a great week. Ciao, ciao.